Hi, the rupees 20 lakh crore stimulus package unveiled by Government of India to combat COVID-19 has both fiscal and monetary measures. Since the unveiling of the package, we have seen a lot of ideas and further measures, and of course, there are many requests for tax relief. But there has been very little discussion or idea generation with respect to the ways and means to generate resources so that the fiscal balance could be kept intact. Here is an attempt to generate some ideas to augment the resources base of Government of India. This is a comprehensive list and therefore includes some tailwinds which are existing already. Let's explore these ideas in detail. International crude prices hovering around about $40 per barrel has a huge elbow room. For every $1 reduction, India saves $1.5 billion. If the low price band were to continue, God willing, we could end up saving rupees 1.7 lakh crores compared to the previous fiscal year. The next tailwind is low interest rate regime. Reserve Bank of India has reduced the anchor rates by 115 basis points since the post-COVID-19 issue. Government of India, being the largest borrower, saves rupees 1 lakh crores with every 1% reduction in coupon rates. Rupees 9.32 lakh crores is stuck in disputed tax demands, and this is the universe the Vivad Se Viswas scheme addresses. Even if you assume 10% realization, that could contribute rupees 90,000 crores. Of course, some minor tweakings are called for. Right now, the taxpayer has to settle on the entire proceeding, but this should be changed to demand our issue-based settlement. There could be three or four issues in a proceeding, and if a corporate board or management think that merit is on their side with respect to two issues, then they should be allowed to settle for just one issue. So we should move over from proceeding based settlement to issue based settlement. The union budget assumes a disinvestment target of rupees 2.1 lakh crores. Normal course government would have achieved it, but post COVID-19 this has become a stretch target, and therefore a few new ideas are to be explored. Exchange traded fund ETF has gained ground. The government of India could download a part of its holding in public sector banks and monetize through retail sales of ETFs. If a part of LIC shares were to be blended into this structure, I guess that would make the package a bit more attractive. The advantage of ETF is that the voting rights will remain with the government. The next idea is introduction of golden share. By just holding one golden share, government could control 26% or 51% or for that matter 74% of the voting rights. Presently, all equity shares rank pari passu. Companies Act should be amended to accommodate disproportionate voting rights for a golden share which can be held only by the sovereign. Another idea is Topco, Holdco, Opco structure. Instead of selling shares in the operating company, government could transfer part of its holding in several PSUs to a special purpose vehicle, and shares of that SPV are monetized. Apart from retention of voting rights, there is separation of ownership and management, which augurs well for corporate governance. All the above three structures allow gradual reduction in government holdings, say from 76% to 51% and then to 26%. Each of these threshold has some control significance. With 74%, one can pass any special resolution. 51% allows you a simple majority, and therefore ordinary resolutions can be passed easily. 26% is construed as negative control because you can block any adverse special resolution. Value realization through all these foregoing three ideas could be bit lower than a strategic sale. But strategic sale, as you know, is a time consuming process, and of course it could turn out to be a political hot potato. Lest we forget the Honorable Supreme Court's diktat that What is done by the parliament can be undone only by the parliament. Therefore, some of these decisions may have go to the parliament back and forth. Therefore, these ideas aim at quick realization to fund the stimulus and revive the economy. And the logic is that with this gradual disinvestment, as and when it is achieved and market recovers, the value of the remainder holding will increase in any case, and the average realization could be on par or slightly below par when compared to a strategic sale. An economic value added exercise is to be initiated and all somnolent assets are to be monetized. For example, Air India holds 40,000 paintings, including the works of M.F. Hussain, V.S. Kaitande, and Ela Manon. Thousands of crores of productive capital can be realized and channelized to better welfare measures. Government departments like railways, defense hold huge land parcel which could be sold and leased back to generate the much needed resources at this need of the hour to fight CV-19 and stimulate demand revival. Despite another idea is RBI transfer. Despite transferring 52k crores of additional amount last year, Reserve Bank carried provision at 6.8% benchmark with the recommended 6.5%, and one could expect another dose of this additional transfer this year too. Telecom sector, at least the remainder of the telecom sector, is in a robust status and spectrum auction could be expedited. Then we move on to the huge forex reserves of $500 billion held by the country. A part of it could be used in these extraordinary times. Of course, this is a very complex process, and forex reserves are not freely available for budgetary allocations. But then, $500 billion is a huge sum even for a $2.8 trillion economy like India. Actually, the $500 billion, because it is invested abroad largely, is earning a very low interest rate despite RBI doing a much better job than international wealth managers. But that yield being much lower than the GDP growth, indirectly, this bloated forex reserve is in a way pulling down the GDP growth. Something must be done. Well, it is a topic on its own, and let's explore later. Thank you.